Okay. Sure, right. Right.
Good evening, members, and good evening, the today's speaker, CA Mohan R Lavi sir. ಮಾಡಿ ಮಾಡಿ ಕೆಟ್ಟರು ಮನವಿಲ್ಲದೆ ನೀಡಿ ಕೆಟ್ಟರು ನಿಜವಿಲ್ಲದೆ ಮಾಡುವ ನೀಡುವ ನಿಜ ಗುಣವುಳ್ಳಡೆ ಕೂಡಿಕೊಂಬ ನಮ್ಮ ಕೂಡಲ ಸಂಗಮ ದೇವ ಎಂಬಂತೆ ಇವತ್ತಿನ ಜ್ಞಾನ ದಾಸೋಹ. ಈ ಜ್ಞಾನ ದಾಸೋಹದ ಇವತ್ತಿನ ದಾಸೋಹಿಗಳು ಮೋಹನ್ ಆರ್ ಲಾವಿ ಅವರು. ಸೊ ಡಿಯರ್ ಮೆಂಬರ್ಸ್ and the today's speaker Sri Mohan R Lavi sir, that I welcome you on behalf of Bangalore branch for the today's Jnana Dasoha live webcast on the topic following the revised code of ethics 2019 during this COVID-19. So the members Bangalore branch is conducting continuous live webcast. Every day we have at 4 o'clock this unique time. Till May 1st we have already scheduled the all live webcast. That today's speaker is CA Mohan R Lavi sir. He is a practicing chartered accountant. Last 28 years he is a practicing member and is presently serving as a partner in the KP Rao and Co. He authored the book. In the first book is on service tax. Then he wrote a IFRS and Ind AS, and he is a regular columnist in the Hindu Business Line and Deccan Herald. And he went across the country for presenting his papers, and also the extracurricular activities. He is also a good cricket player and very humorous personality. CA Mohan R Lavi sir, welcome you sir for this today's session. And with distance maintained, I can say namaskar.
Namaskar.
So coming to the members, dear members, I see here our SRC member Pannaras sir is on the screen, off the screen, and is watching from Ballari all the way. I welcome Pannaras sir also for this session. It is a boosting for us, encouraging to conduct more such programs. And senior members like Suresh Bandiwad, Raghavan Joshi, and all from Hubli and Gadag are viewing. So this is it is give a great satisfaction for me. In this corona time, we are having this overcoming the challenges of corona, and we are deliberating, and we are making the connecting to all the people from across the country and the globe also. So I will not take much time. So I request CA Mohan R Lavi sir to start the session. Thank you, sir. Over to you, sir.
Thank you, Koreji. Thank you. I will just end him. ನಿಮ್ಮನ್ನು ಎಂಡ್ ಮಾಡ್ಬೇಕಲ್ಲ ನಾನು? ನೀವು ಇಲ್ಲೇ ಇರ್ತೀರಾ?
You can start, sir. You can start.
Okay. ಯಾಕಂದ್ರೆ ಅವರು ನಿಮ್ಮನ್ನು ಎಂಡ್ ಮಾಡ್ಬೇಕು ಅಂತ ಹೇಳಿದ್ರು, ಪರವಾಗಿಲ್ಲ. Okay. So anyway, good evening to all the members. I will just go back to my presentation here. Okay, so good evening to all the members, and thank you, Ravindra Koreji, for giving me this opportunity to speak on this revised code of ethics. Thank you for that kind introduction also. I am not very sure that I am a very good cricket player, but anyway, so I will take that as a compliment, because you only seen me playing only on a couple of occasions, I think. As Kore was saying to all the members, this is a very important topic, though this has come at a time when we least expected this thing upon us. The Code of Ethics has always been there with the CA Institute. In fact, if you go back, you can see that the first edition of the Code of Ethics of the ICAI was issued in October 1963, which was about 14 years after the Chartered Accountants Act was passed. This was the first edition of the Code of Ethics, and of course, over the years, the profession has changed. And what we are going to discuss today is the 12th edition of the Code of Ethics. Now, this is not, when I'm talking about the 12th edition, I mean that as these editions have come up, the Institute, as the ICA, has also been changing the Code of Ethics, what members can do and what members cannot do. But a very drastic change has happened in 2019 in the 12th edition. It has sort of completely overwritten the Code of Ethics. Actually, I should not say overwritten, rewritten the Code of Ethics. And it's applicable to members in practice as well as members who are in industry. So it is a fairly comprehensive code. And the reason why I chose to talk about this at this point of time was the fact that this was supposed to have come into effect from the 1st of April 2020. And it has now been pushed to 1st of July 2020. Like most of the things, most of the compliance requirements, compliance of various provisions of the Act have all been pushed to June or July. So the ICA has also pushed the applicability of this Code of Ethics to 1st July 2020. There are a couple of reasons why this becomes important. One is, of course, that during this period of, April, May, and June, you will probably be bound only by the old code. However, the moment we transition into these 3 months, the new code will automatically apply. So we would need to be aware of what the provisions of the new code are. And there are, frankly speaking, when I looked at the code a couple of months back, I thought that not much of a change was there as compared to what we had already known, in the old code or the 11th edition of the code, so to speak. But as I read the code completely and a little bit more in detail, I saw that there were significant changes. There are significant changes in the 12th edition, some of which we'll be discussing today during the course of this presentation. And why this becomes important during COVID-19 is because suddenly for us, everything has become different, right? I mean, we were used to doing certain things in certain manners, and all that has changed now, all of a sudden. In the sense that we are, I'm not talking about the lockdown, I'm not talking about the social distancing and all those things, but the way in which you're probably approaching our work, our profession, has probably changed or is probably going to change very drastically. So I've put in a question here saying that, is e-auditing or offsite auditing the new normal? Because irrespective of when the lockdown is lifted, irrespective of when we go back to our offices, and irrespective of when clients start giving information to us and we get back to normal, which could take at least a couple of months. Even then, I would still feel that physical meeting, traveling to clients' places may probably not, take place the manner in which it was taking place, in the past. So what becomes important for us to understand is that the new Code of Ethics also has a link with the standards of auditing and what an accountant should do, apply those particular standards of auditing. So they've linked the standards of auditing with the Code of Ethics, which was probably not done in the previous Code of Ethics. So because everything is different now, and we will probably not be doing audit in the way in which we know audit to be done, I think one of the important questions we have to answer is that, can we take protection saying that during this time, the Code of Ethics will have to be relaxed because, we'll not be able to probably go and get the necessary information from the client, or the client may not be willing to give the information because of, security issues. A whole bunch of questions will obviously come up there. But one of the things which has also been discussed during this COVID time is this word called as the force majeure clause. And though this has not been specifically answered, one of the questions which definitely will come up is that, can we use the force majeure clause to the Code of Ethics during the pandemic time, or during this 3 months, or during the lockdown period? So basically what the force majeure clause says is that it's an act of God. So you can't ask a person to do the impossible. I mean, in essence, this is what the force majeure clause is. It says that it's a French word which means act of God, and you cannot expect any person to do the impossible. You can apply to the law of contracts also. So when things are so different, one of the questions which definitely will come up is that, do you really want to have a Code of Ethics at this point of time? Can I use the force majeure clause to get away from the Code of Ethics and get a sort of a relaxed Code of Ethics? And of course, surprisingly, what has happened is that there's also a very good decision of the Supreme Court in the case of Energy Watchdog versus CERC. And I mean, it's a very detailed decision which spoke about a lot of aspects of the force majeure clause. But I'll just mention a couple of important things, and that is that the Supreme Court said that the force majeure clause will not apply if alternative modes of performance of the contract are available. Now, whether the code of ethics is a contract or not is a much larger discussion. But basically, the Supreme Court has said that if I've got an alternative mode, if I can get information alternatively from the client or through alternative mode from the client, I cannot use the force majeure clause. Similarly, I have said that a mere rise in the cost or expenses will not frustrate a contract, so we cannot push in the force majeure contract here. So if you go back to this question here, I would probably think that if you go back to the question here, for the code of ethics, applying the force majeure clause may not be a workable solution right now. I think we would probably be bound by the old code of ethics still, but the force majeure not obviously work here. Why this becomes also important is because, as I said earlier also, the comfort of the on-site auditing may not be there in many instances or in some instances, in the sense that we may not want to travel, the client may not want us to travel and all those things. And what happens to our SA 230 on documentation? Can we get all the documents over email, Dropbox, Tally backups, whatever it may be? Would that suffice at this point of time, or would we probably have to do the audit now, sign off, and then get the documentation later? All these issues would crop up. So I think one of the things which becomes very important at this point in time is the fact that what is your arrangement with the client? I think that becomes very, very important. Maybe it probably makes a lot of sense to probably have a word with the client and tell him that, look, this is what I'm going to do, and this is what you'll have to give me, and this is what will come in the report. I think if this sort of a discussion happens with the client in advance, it would probably save a lot of this the ethical issues, because sometimes documentation may not come, or documentation may be too large to be sent over email, it may be confidential. So how do you work around this? How do you give your audit report? These questions could obviously come up here. There could be ethical issues also involved here. I would probably suggest that it's best probably to speak to the client and probably get some sort of a comfort from him, saying that it'll probably be given later and all those things. I'll come to what other companies are doing a little bit later on. Also, I think by tradition, many of our clients have got this very nice habit of discussing with us all the year-end entries. Before they pass the year-end entries, they would like to talk to the auditor and ask him that, do you think this entry is to be made, and what are the provision to be made, reverse a provision, plenty of such questions obviously will come up from the clients. So this interaction will probably have to happen over phone or Zoom call or whatever it is. And again, that the comfort which both the client and the auditor have of one-to-one interaction is not going to be there. So I'm not saying that the view of the auditor or the client is going to change, but it's just that the comfort factor may give rise to some interpretation which could be different from what it was in the normal process, because the auditor is not going to see all the documentation as he would have, nor would the client probably be giving all the documentation. So these sort of things would crop up at this point in time. Again, the reason for all this discussion about the code of ethics and what sort of code of ethics you need to follow for these 3 months or these 6 months of this COVID time becomes important, because a larger question which comes up is that we know very well that this is not going to be a 100% job, right? I think we know that very, very well. We're not going to, able to do what we were doing in normal circumstances. So we would have to probably make a few provisions as to how we probably tackle that situation here, how we tackle those situations here, and then, probably move forward with this thing. I'm not saying here for a moment also that the code of ethics is not going to be followed, but I think we have to get some sort of a workaround to understand how this we will have to probably apply this in a situation which is not normal for all of us, and which should probably be a one-time situation only. Hopefully it'll be a one-time situation only. I'm just putting this in front of all of you. This is what Wipro has given in their year-end financial statements. And this is what they have said on the recoverability of receivables due to this COVID impact. In fact, a similar note has been given by TCS, I think, and Infosys also given something on the same, on the same context or the same sort of background or the same basis. Now, the important thing here is that they are saying here that we don't know, as we are speaking today, what is going to happen. And they have said that the impact of the global health pandemic may be different from the estimated amounts at the date of approval of these standalone financial results. And the company will continue to closely monitor any material changes to future economic conditions. So maybe this was this note could have probably been pushed in because all these companies have finalized their financials in the last couple of days, which is like 2 weeks after the end of the financial year. So maybe it was probably too early for them to even make an assessment of what impact this could have, because this impact will probably be known only possibly by June or July only. But yet they have put in this note. Now, if you are going to audit this set of financial statements, in which basically what the company is saying is that they have not made any provisions for anything because of COVID-19, right? And as there's a very good document given by the ICAI, which talks about what is the impact of COVID on financial reporting as well as auditing. I think basically two things come very clearly to mind. One is the impairment of assets, which will definitely be impacted because of a long lockdown and inability to go to the office and assets not being used completely. So definitely, impairment would be a standard which will be very, very important. Similarly, events after the balance sheet date. Now, basically, what Wipro has said here is that we do not do on the date of signing of the financial statement. So, whatever Wipro is doing will probably come in the subsequent financial year. But suppose we do have an entity which is, finalizing a little bit later, and they are able to make an estimate of what could have been the impact as on the balance sheet date. We could basically have a disclosure or an accounting entry for depending, of course, whether it's an adjusting event or non-adjusting event. So we will have to wait to look at that situation also from the point of view of the auditing point of view, because of the fact that the information which is given to the auditor is basically coming from the management. So they know, or they have made an estimate of what is the impact of COVID on their financial statements, and the auditor is going to pass his judgment on that particular note which has been given here. Now, you will probably get such non-committal notes from the management. They will probably not crystallize amounts. They will probably not crystallize values, so to speak. So how do we work around this to get some sort of a comfort is something which will have to be tackled on obviously on a case-to-case basis. But these could be significantly impacted there. I am just going to take you back to this 1963 Code of Ethics, the first edition of the Code of Ethics, which I saw. And this was a statement made by the ICA president at that point of time, one Mr. R.C. Cooper. And he says that ethics is a state of mind, and there may be some act which, though it may not strictly fall under one of the items of the schedule, may be one which may not be proper by any moral or ethical standards. In the larger interest of the institute, the council exhorts all the members to search their hearts and conscience whenever in doubt, and thereby assist towards the maintenance of high principles of professional conduct established by the council. The reason why I put this up for all of you is that, even today, these words or this advice probably still, holds good, though this was given in 1963, almost about, 50 years, more than 55 years later also, it still holds good. Now, the reason why this came in is because this was the first edition of the code, as I told you. And this first edition basically told auditors what they can do, what they cannot do. It was that simple. They basically gave a list of things they could do and a list of things they could not do, right? And some of those things are still applicable even today, like bookkeeping, for example, is applicable even today here. But these words still hold good for us even today. And so I thought we should probably, look at this. Now, if you look at the 2019 code, it has been given in almost, you probably say 4, 5, 6 parts. And you got something called as the fundamental principles in the conceptual framework of the code. You got something which is applicable to professional accountants in service. Now, professional accountants in service was not a part of the code for quite some time. This came in about 4 or 5 years back, wherein they specifically put in provisions for people who are in industry and professional accountants in public practice. And of course, we've got the independent standards. I told you independence for audit and review engagements, and of course for assurance engagements other than audit and review engagements. I told you also earlier that this revised code of ethics talks about and also gives a link to the standards of auditing. If you look at the independent standards, both 4A, 4B are actually a sort of a link to the auditing standards. So they say that you'll have to maintain your independence for all your review engagements, and you will have to follow those particular auditing standards as per this thing. Now, one of the questions that somebody asked me was that why are they saying professional accountants in public practice? Why not in private practice? I mean, we've always been known to be people who are chartered accountants who are in private practice, not in public practice. I think basically as a profession we are serving the public, so I think that's why they've changed this without any specific sort of intention. They just said that we are in practice for the purpose of the public, for the larger public, if you want me to use that particular word. So therefore, part 2 would be for people who are in service industry, if you want me to use the word industry, and part 3 would be for accountants who are in public practice. And obviously, for people who are in practice, the independent standards would apply a little bit more than those who are in industry. And the fundamental principles and the conceptual framework is applicable for everybody also. Now, the revised code of ethics picks up from the previous editions and gives us 5 pillars of the profession, in which they have spoken about integrity, objectivity, professional competence and due care, confidentiality, and the professional pillar. And the entire code of ethics is surrounded by these 5 pillars surround the entire code of ethics: integrity, objectivity, professional competence and due care, and confidentiality and professional behavior. The code specifically uses the word called as threats. A large part of the code, a significant portion is devoted to what are called as threats. Basically, when the code is talking about threats, they're talking about what are the threats to these 5 pillars. What could be a threat to my integrity? What could be a threat to my objectivity? Professional competence and due care could have also come, a lot of threats could come in there. So, and the code tries to give us resolutions as to say that how do we overcome those threats? How do we mitigate those threats? They may not be possibly completely eliminated, but how do we integrate, how do you mitigate these threats is something which the code tries to sort of, give us some sort of a guidance as to how this could possibly be done. And they have gone on to explain what are these 5 pillars. I'm not going to go through the entire thing because I think this is all basically a repeat from what we already know. And, we basically are already following this to a large, extent. But just a couple of things I wanted to place before all of you. One was that, of course, that, professional competence and due care has been expanded to mean that the client receives competent professional service. And they specifically mentioned that. And even for the objectivity clause, if you look at it, they say that they should not compromise on professional or business judgments because of bias, conflict of interest, or undue influence of others, and to comply with all the relevant laws and regulations and avoid any conduct the professional accountant knows might discredit the profession. So these are all pillars which, these are all explanations which you already know about, because this has been taught to us right from the time we were doing a CA final, right? That we have to follow all these particular, act professionally, and due competence, due care should be given, integrity, and all these things here. But code of ethics sort of, just goes and repeats that, right? And I'm going to give you this example of this misconduct. I'm going to put in this name of this CEO also, called as Govinder Singh versus ICAI. And this was actually a very small matter, but suddenly it went, blew out of proportion, went all the way to the discipline committee and all these things here. So basically what happened was that this man, who was a chartered accountant, he had a friend who was probably a client also. And I think the client had given him custody of all his assets, and including some shares and all these things. And basically, I think what happened was the client told the chartered accountant Govinder Singh to probably sell these shares at some point of time. I think he had given him power of attorney, whatever as the case may be. What this man did was that he did not sell the shares as such, but he took the shares in his own name. He transferred the shares to his own name because he was in physical possession of the shares. He transferred it to his own name, and probably at a time later on when the prices were high, he sold these shares at a higher profit than what he would have got had he sold it at a point of time in the past. Now, when this came up before the committee and also before the authorities, the question he was saying was that this is purely a matter between me and my client. I mean, there's no misconduct involved here at all, because he has given me the shares. I could do whatever I want with the shares. So where's the question of having a misconduct here? And the disciplinary committee as well as the authorities ruled that you would be held guilty of misconduct because of bringing disrepute to the profession. Doesn't matter that it's a private thing between you and your client, but you are bringing disrepute to the profession. Therefore, it is a misconduct. In fact, if you look at some of the judgments, there are quite detailed judgments as to what is this word called as bringing disrepute to the profession. Even that has been very detailed explained in a couple of detailed judgments. When you can probably go through it in the ESP website sometime when you or probably get the time. But this was a very interesting case because his contention was that there's nothing to do with the ICA at all. This is between me and my client, and he gave the shares to me. I could do whatever I want with it. So this sort of gives us context as to what could constitute, misconduct, or more importantly, probably how should a chartered accountant, conduct himself in public. I think this gives you a sort of an indicator as to why this becomes important. Now, there are certain codes which are coming within the code itself. And if you look at the code of ethics, when you probably go through it, you will find that you've got something called as R and A. These are codes given in the sentences within the code. The R would mean that the code is imposing some obligation, which says that you have to act with integrity. That's an obligation which is imposed by the code. And the paragraphs which have been written with A sort of give you a context, explanation, suggestions for actions or matters of consider, illustration, and other guidance relevant to proper understanding of the code. So the R, if you want me to put it in a slightly different manner, is mandatory. The A is for understanding only. You would definitely have to follow all the paragraphs which are mentioned or which have been, prefixed the word called as R because they are mandatory. And the paragraphs called, which are A, are sort of explanations for that, for those obligations there. Now, again, just to tell you, explain to you how this works, I spoke to you about the word called as threats, which are a very common part of the code. And what are the various kinds of threats? Now, the paragraphs which are, mentioned as R would probably explain to you what those threats are. They could probably say you have to eliminate, let us say, an advocacy threat or intimidation threat. And the paragraphs which are mentioned in A sort of give you some sort of a context or explanation and say that what should an accountant do to mitigate that threat. So these are, how these codes have been framed within the code itself. So you'll have to probably look at both from different angles now. Now, if you look at the conceptual framework of the code, it talks about these are the threats which are mentioned here. Now, this language of threat is new to the 2019 Code of Ethics. This was not mentioned specifically in the previous editions of the Code of Ethics. Now, these are, as I told you previously, the code basically sort of tried to explain what a professional accountant could do and what he could not do. But the revised code has sort of summarize those do's and don'ts into what could be possibly called as the conceptual framework, in which they have identified 5 types of threats which any professional accountant, whether in industry or in practice, would probably have to face and would have to do on a day in and day out basis. They're talking about a self-interest threat in which there could be a financial obligation with the client, which could result in a self-interest threat. There could be a self-review threat, and there could be an advocacy threat. And probably one of the most important things which, again, becomes important in the context of all this rotation and all these words is this thing called as the familiarity threat, which is basically what they're trying to say is that the client is very familiar with me and I'm very familiar with the client. So it's been a long relationship. Therefore, I may not possibly, follow all the code of ethics in its entirety. There is also a stronger threat in the form of an intimidation threat, in which I am forced to do something, or the accountant is forced to do something under the context of intimidation. So this also becomes a very important threat to worry about. And if you look at the brief explanation of all these threats, they say that a financial or other interest may inappropriately influence behavior on a self-interest threat, and self-review threat, which basically means that not evaluating previous judgments made. Again, here, if you look at a client with whom we have been having a pretty long relationship, and some judgment has been made in the past, now those judgments would probably have to change. I don't go back to those judgments. I don't evaluate what could have been past impairments in this particular case. These could be a self-review threat. An advocacy threat arises from the fact that I promote a client to such an extent that objectivity is compromised, which basically means that I'm acting as an advocate for the particular client. I also told you about the familiarity threat, which talks about auditor knowing the client too well, and vice versa also. And finally, we have something called as intimidation threat, which means that undue influence over the auditor, which basically could arise in a few circumstances wherein this concept of independence of the auditor is sort of jeopardized because of any of these threats. The moment any of these threats are sort of not mitigated or not minimized, we could have a threat to the independence of the auditor. And once the independence is questioned, we could have situations of wherein whether the auditor is doing his work properly or not. All those collateral issues will probably come up once this particular independence has been threatened, or once the independence has been questioned by the client here. The code of ethics is very clear that threats cannot be eliminated. This is a part of our job. They should only be at acceptable levels, in the sense that I cannot say that I will completely be threat-free during the course of my assignment. I can only sort of reduce them or minimize them, mitigate them to the extent possible. I can only probably reduce them, because we all know for a fact that all the threats I spoke about previously are something which we face probably in most of the assignments which we are probably doing. And again, though specifically we don't look upon the assignment as a threat by itself, or we don't look upon these threats when we're doing the assignment, at some point of time this would definitely come in and hit us. And this would probably come in and hit us during the course of the assignment, and saying that, okay, this is something which should I compromise, should I not compromise? These questions come up at some point of time. So therefore, elimination is not possible. We should probably ensure that they are probably at acceptable levels here. And of course, considerations for the audit. This is again from the compliance or from the regulatory framework, or the framework of the code of ethics. They're talking about basically two things, which is that the concept of independence and this word called as professional skepticism. Now, independence, of course, as we already saw earlier in the 1963 code, is something which is a state of mind, basically. It's only a state of mind. So the code of ethics expects that chartered accountants, auditors, at all points in time, will act independently. And independence is not a choice. It is mandatory. We don't have a choice of independence here. We will have to obviously act independent or at any given point of time. The moment we use the word called as acting independent at all point of time, those threats automatically become minimized, because at each of those levels or each of the stages, you are acting independently. Therefore, the question of any of those threats going or superseding your independence would probably not be there at all. The other consideration which the code of ethics emphasizes a lot on is this word called as professional skepticism, in which they are basically trying to say that how much ever familiar you may be with the client, with the numbers, with the person who is behind those numbers, with the department or the team of people who are presenting those numbers, you still have to look upon that particular set of numbers with a little bit of skepticism. Now, again, they're not trying to particularly say that, you doubt every transaction, or, you sort of, say that all the transactions are wrong. That's not the consideration here at all. But many a time what would possibly happen is that just because of this threat called as familiarity, right? We know the client very well. We know the account for the last so many years, and he has not done anything wrong. You've also been, comfortable with whatever he has done. But yet, the code of ethics says that when you're looking at the numbers every single year, look at it with a little bit of a professional skepticism, because don't take things for granted. If you want me to put this in a different way, it says that don't take things for granted just because you know that person so well. You still will have to put in your thinking cap there and find out, is that really correct? Could there be something wrong here? And we have got situations wherein, if you look at a lot of situations that have happened recently over the last couple of years, every single one of those companies, people did not expect them to actually sort of, file for bankruptcy or, go under a severe loss, as the case may be. So, the audit considerations in the Code of Ethics talk about both being independent at all given point of time and also always having professional skepticism. Now, I'm also going to talk about accountants in service, though I think a majority of the members could probably be in practice. Quickly, let us, look at also what could be the, issues for members who are in service. I've also got a little bit of an example as to what you should not possibly do and, under service here. So if you look at those 4 threats, the Code of Ethics says for members who are in service, members in industry, the self-interest threat comes from the fact that I have a financial interest in or receiving a loan or guarantee from the employing organization. Now, I've got a huge loan from the organization, an organization which gives out loans to employees here. It is possible that I'm holding a pretty important position there in that particular organization. Automatically, there's a threat because I would be obliged to the organization for giving me that loan, which I'm probably paying from my salary here. So there will be a self-interest set there. But even then, as I said earlier also, they are supposed to act independently there. And I could be participating in an incentive compensation arrangement offered by the employing organization. If I present a certain set of numbers, I get a particular incentive. I may be tempted to probably brush aside accounting standards and ensure that those numbers are met only because I want my incentive here, right? A professional accountant having access to corporate assets for personal use. Personal use per se should not be a problem here, but personal misuse could probably be a threat, very bad, a pretty severe threat here. So these could all be self-interest threats. And a professional accountant being offered a gift or a special treatment from a supplier of the employing organization. Now, we all know, as chartered accountants who have been doing audits for so many years, we all know that the purchase department is probably the most susceptible to all this form of, giving gifts or special treatments from suppliers, the purchase department in any organization. But sometimes there's a trickle down to the finance department also, because what the purchase department orders, the finance department pays, right? So in many cases, the finance department could have a spin-off impact, because they are ensuring that the payment is made for that particular, order which is given by the purchase department. So this will all create what is called as self-interest threats here. And the self-review threat is talking about a professional accountant determining the appropriate accounting treatment for a business combination after performing the feasibility study supporting the purchase decision here. Or similarly, a professional accountant determining the appropriate accounting treatment for a business combination. I've just repeated that again. So, it's just, I've done a business combination. We have done the feasibility study. I'm also looking at accounting treatment. So there's obviously a clash of interest here. This could be a self-review threat here. A professional accountant having the opportunity to manipulate information in a prospectus in order to obtain favorable financing. Now, if you look at how the corporate world is structured now, and if you look at all these, the new gen technologies like, private equity coming into play and, angel investors, PE funds and all these things here. All these people have come in and they have certain expectations from the organization, in the sense that you will report certain amount of growth and you will probably have to go for a public issue, let us say in 5 years. The value of your company, and we use the word called as value as in valuation, right? Doubles in 5 years. I have an exit price. So each one of these people who come in and invest money in the company have a particular target in mind. It could be share price, it could be valuation of the company per se, it could be revenue, it could be profits, it could be, in case you have got companies like Flipkart or Amazon, it could be number of, customers who are ordering online or number of people who are viewing your website. They have a whole bunch of, requirements here. It is possible that the accountant who is in charge of reporting these numbers has got opportunity to manipulate this information just to obtain that particular number or just to obtain that particular figure or to get that particular target price, as the case may be. The way he would do it is that he would probably manipulate the revenue figures, he'd probably change the revenue, the expenses. He could do a whole bunch of stuff because he's got control over that particular thing here. This becomes an advocacy threat here because you are trying to use what is possibly not there to obtain a benefit. This becomes a straight advocacy threat. And we use this word called as TCWG. It's called as those charged with governance. So because you are a person who is charged with governance now, you've got the opportunity, ability, and the resources to manipulate this information in a prospectus in order to obtain favorable financing. This is what example has been given by the Code of Ethics, but there could be other situations in real life wherein an accountant in service, accountant in industry has got opportunity to manipulate the information in any manner he wants just to obtain a certain end result. As I said, it could be revenue targets, profit targets, a particular share price being achieved or a particular valuation number being achieved. Any of these things would probably, become important for this thing here. I see that there are some questions which are coming up. I'll take them at the end because I'm in one screen right now. I can't flip screens, so I'll take that a little bit later on, right? I'm going to give you a very interesting case which happened in this company called as Lucking Coffee, which is basically a Chinese company. The reason I'm telling you this is because of this manipulation of information, right? Now, basically, to give you a background, Lucking Coffee was a Chinese company. And it was, if you want me to put it in a very simple manner, they were trying to be the Starbucks of China, right? They attempted to be the Starbucks of China. And they sort of, had their coffee shops all over China. Various places in China. And Lucking Coffee had a lot of private equity people who had funded it also. They're also listed in the NASDAQ or the US Stock Exchange. Now, by this time, all of you must be very familiar that China and the US, they never get along with each other for not only for trade issues, but also for, I think, accounting issues here. Now, this company was, listed on the NASDAQ, and they kept on saying that our revenues are growing, and we are going to probably break even in a couple of years because of the overhead cost of was very high. They were, I think they were saying that break even by 2021, whatever the case may be, right? Now, the very strange thing happened in this company. What you're seeing on the screen now is basically a WhatsApp message which has been sent by the finance person to the salesperson. And he has said that from November 23rd of 2018, that I'm talking about 2018 here, the pickup number rules will be changed. It will not be in serial order of 1, but it will be a random number. I'll explain why this is important. So if you go to a particular Starbucks, coffee shop today, if today's invoice is, if suppose I am going there and my invoice number is, let us say 1020, next person comes in, his invoice number is going to be 1021, obviously, because it's supposed to be serially numbered. Even from a GST perspective, it has to be serially numbered. But what Lucking Coffee was doing here was that just to boost up the sales, what they said was that we'll generate random numbers, and basically what will happen is this next person will probably get the serial number 1028. And 1021 to 1028 will obviously be fake transactions. So this SMS in Chinese was caught by a particular US investigator who investigated Chinese this Lucking Coffee's shares. And so they obviously sort of agreed that they have boosted up their shares and their sales, and the CFO was held responsible for this again. And he said, yeah, I'm the person who sent this particular message here. A whole bunch of stuff has happened now, and they are probably going to go for liquidation and bankruptcy, as the case may be here. But it's very interesting how this was actually found out. And I think this is, again, something which is very elementary for all Indian accountants, and we would have just found it out just like that, right? So what Luckin Coffee was saying was that apart from coffee, of course, being a Starbucks competitor, so to speak, they also were, selling pastries, other things here. And in China, they had different, just like in India, they have different VAT rates for this. Like pastries are at 14%, and I think coffee is at some 7.5%. The rates don't really matter now for this discussion, right? And Luckin Coffee was saying that our sales are going up. And this investigator was looking this from the US, found that the VAT payments are almost the same. VAT payments are obviously not going up. So when he dug deeper, he found out all these things. So basically what was happening was that they were ensuring that the revenue was falsely being recognized, but the VAT payments were not being, proportionately misrepresented, if you want me to use the word, proportionally misrepresented, because, I mean, this is something which any accountant would probably thought of this as a elementary thing, but, Chinese are Chinese, so they didn't think about it very clearly. Now, here what has happened is that because of this one WhatsApp message, and, again, all of you are members of WhatsApp groups, admin is under a lot of pressure and all, they said that this is evidence that you are manipulating the results. The Chinese court has held the CFO responsible, saying that by sending this message, this is evidence that you have got a intention to manipulate the results or boost the sales. Therefore, professional misconduct, all those things will probably come in here. So here you can find that he is having an opportunity. Advocacy threat is very, very clear here to manipulate the information in such a manner that, a particular end result is achieved here. Now, obviously, this could not be justified through bank account balances, VAT payments, a whole other, what you can say, metrics could not be met here. So they were under a situation of, I think they are now under some trouble of going for bankruptcy and all these things here. The other thing which also, which is important, is that a professional accountant being responsible for financial reporting of an employing organization, or when an immediate or close family member employed by the organization makes decisions that affect the financial reporting, this is fairly simple here. And again, interpretation could come in from the, management. You could probably find that if I don't agree with a particular accounting treatment, you could probably have the threat of dismissal here. What could happen just because I don't agree with a particular accounting, or the company is not going to follow a particular method of accounting. These could be, situations here. And here's where the Code of Ethics comes in and says that in case any of those threats are apparent, the accountants could consider obtaining legal advice where they behave that unethical behavior has occurred or will continue to occur with the employing organization. So again, here you look at what they are trying to address these threats, saying that, say, for example, a particular accounting principle has not been followed and you are threatened with dismissal. You are in service, threatened with dismissal. It's possible that you could probably, as a solution, go and ask legal advice. What do I do? Can I, file a case, or, do I have some protection or any other act? All these things could probably come in here. And you could obviously have a conflict of interest also. They are obviously talking about reducing the conflict of interest, because I can't serve for a governance position of more than 2 organizations and use the information between them. That is obviously something I would not put in that as this thing here. And so in case you have got a conflict of interest, the Code of Ethics gives a solution to eliminate the threat by saying that withdraw the decision making process related to that particular matter. You can say that, okay, if there's going to be a vote on that particular matter, I can withdraw from the decision making process here. So I'll probably, use that as a basis for understanding this thing. So this is all about preparing information. I'm not going to talk too much about that, because again, we know that these are all applicable only for members who are in industry. And I'm going to talk about this slide here. For people who are in industry, in case the information given by your organization is misleading, or you are, there's an element of doubt you have got that the organization which you're working for is, probably giving information which is misleading, they're giving you a couple of actions, and that is that, you could probably be discussing this with your immediate superior. That's one option which has been given here. You could consult with the institute or the auditors of the particular organization. Legal counsel could also be taken into account here. Third parties. So basically what the code of ethics is trying to tell us is that don't keep quiet when you know about this. Try to take some particular action, and you could probably consult with any legal team, superiors, institute, anybody else, legal counsel, anybody else could be useful here. They would probably give you a sort of guidance as to what is to be done. I'm going to take up accountancy practice here. Let me look at a few questions first before I take about it. And Alama Prabhu sir, as usual, has got a lot of questions. Alama Prabhu sir is saying, advertising Just DL appearing as best deals. They surface on top. Just DL, no sir, you cannot do that. You cannot push your advertisement to the top. You cannot, in fact, if you ask me, I don't think even Just DL, you can just mention your name there, that's all. I don't think you can even push this and saying that, you're offering this service. But I'll come back to these questions a little bit later on. Can a statutory auditor, Ajay Jain is saying, can a statutory auditor do work as computing advanced tax? Yes, he can do. Calculation of income tax, which will be in P&L account, definitely yes. Act as a retainer for miscellaneous work, depends on what is miscellaneous work. Attend scrutiny matter, DT or GST, sure you can do. Do GST audit, unless you're internal auditor, you cannot do. GST consultant. I'll come to these questions a little bit as I look about that. I think it's a little bit. Okay, now for accountants who are in practice, the code of ethics, what does it say? So I'll just, sorry, I'll go back here, right? For accountants who are in practice, what does the code of ethics say? The self-interest threat arises from having a direct financial interest in a client. Now, again, we're not talking about a loan situation here, but there could be various other financial interests which are coming up for a client. You could, again, whether you have got shares in that particular company, which is obviously cannot be possible, but this is talking about a direct financial interest that could possibly have a self-interest threat. A professional accountant is quoting a low fee to obtain a new engagement, and the fee is so low that it might be difficult to perform the professional service in accordance with applicable technical and professional standards for that price. And having a close business relationship, the last one is definitely taboo. You can't do that, definitely. Now, a lot of members would probably be feeling that, this quoting a low fee, I mean, we all know that the tenders work on this L1 process, and, whether I can quote such a low fee only for the purpose of getting the engagement, and then I'll see what is going to be, the position here. The code of ethics says that you cannot quote a low fee only for the purpose of, if to get a new engagement, if you are not able to do the engagement according to technical and professional standards. So this is this is slightly a very indirect way of saying that don't quote a low fee, right? Or don't undercut your competition. We use the word called undercutting in the old code of ethics. New code of ethics does not use the word called undercutting at all, right? They only talk about a low fee just to obtain a new engagement. Now, if you look at how these things have actually been resolved in terms of the quotation of a low fee as such, right? To each man his fee, right? That's what the thing is, right? So I could probably quote a particular fee which I feel justifies the amount of time, effort, resources I'm going to spend on that engagement. You could come in and have a completely different view about it. You can say, no, I want to do this at a very low fee. This typical word which was used was undercutting in the previous thing, right? But the fact remains that if I am going to do that work and you're also going to do it at a lower fee, both of us are going to follow the same technical and professional standards. So how is it possible that my quote is either too high or your quote is either too low, right? So this balance is what will have to be struck by an accountant here. Now, even though the institute has, in the code of ethics, has specifically mentioned that quoting a low fee is not a offense per se, right? But quoting a new fee, quoting a very low fee only to get the assignment and being unable to do it as per what is required could pose a definite threat here, right? So you will come back to a situation wherein you probably have to worry about how this is going to be done in actual practice. I'll come to that advocacy threat, how to solve this later on when we look at this solutions for this, right? The self-interest threat could be from an accountant having access to confidential information that might be used for personal gain. We could have this word called as insider trading, which comes up very frequently here. Though you may not have shares in the particular company as such, you could have access to information which you could pass on to others. You could pass on to others here. In fact, I do not know whether I think most of you would probably be aware of the case of Arhad Gupta and the case of Goldman Sachs, GS, and the Mr. Gupta, who was the chairman here. He did not hold any shares as such with that person called Mr. Rajaratnam or whoever that person was in those shares. But all he did was that he just said that we had a board meeting and that the results look good. He just made this one phone call to that Mr. Rajaratnam. And that turned out to be, access to confidential information which is given to outsiders. And therefore, he was arrested and the whole, complete thing, his entire career was changed because of that particular, thing which he did here. In your case, you could be having access to, let us say, bumper profits being reported by the client. You know a person who's got shares. Bumper profits, of course, stock exchange may not in the present day react to bumper profits also. That's a different issue altogether. But you could probably be telling the friend of yours that, look, this company is going to have bumper profits. So, you could probably buy more shares. So that would, again, be a severe threat for you because, again, you're not acting independently in that particular, this thing here, right? And an accountant discovering a significant error when evaluating the results of a previous professional service performed by a member of the accountant's firm here. Again, if you look at this from the perspective of what the Code of Ethics is saying, is that how do you rectify the error? Obviously, not allow the error to sort of, continue. But would you pass the blame game onto the previous person? Obviously, no, because you have taken over as auditor here. So how do you, this could pose a threat to your, conducting the work in a proper professional manner, if you, whether that will, in fact, that is something we have to see. Advocacy threats would come in a situation where a professional accountant promotes the interest of or shares in a particular client, and he acts as an advocate on behalf of a client in litigation or disputes with third parties, or he lobbies in favor of legislation on behalf of a particular client here. I think this threat of familiarity is also very, very important for us because, again, this is where I think the Code of Ethics would probably have to be applied completely here. Director or officer of the client, that's fine. Or audit team member having a long association with audit client. I think this word called as rotation of auditors comes into play here. And the audit team member having a long association with the audit client results in a familiarity threat, and that could lead to an accountant overlooking material facts only for the simple reason that he is just familiar with the client, and maybe the client has not told him all the information only because of his familiarity, nor has the auditor asked for this information only because of his familiarity. Now, again, as all of you are aware, we had this situation of rotation of auditors here, but the European Union and now recently also the RBI is coming out with guidelines on this. They are saying that rotation of auditors once in 5 years is perfect, no problem. That is already there in the Companies Act. That is taken care of. But once in 3 years, the audit partner, the signing partner, would also have to rotate here. And this is a legislation in the European Union. They are saying that an audit partner would have to rotate, the audit partner, the audit signing partner would have to mandatorily rotate once in 3 years, the firm once in 5 years, audit partner once in 3 years. So basically, independence is maintained because of this rotation here. And of course, audit team member, we really don't worry about team members or managers also, but it could also trickle down to managers. You can't have a person who's being an auditor or a manager in the audit for too long a time. Maybe you could probably use the same 3-year rule there also and say that along with the signing partner, the manager also probably rotate after 3 years. We could have situations wherein you've got 2 partners in a firm. One partner is an audit partner, one partner is a tax partner. How does that work? Tax partner would not be able to know anything about auditing here, and vice versa. How does it work? I think some workaround will have to happen because RBI has already come out with this guideline in their rules for NBFCs, SEBI also has a sort of a discussion paper on this ready now, and saying that the audit partner will have to change, rotate once in 3 years. And this has not come in because of the code of corporate governance rules of the Uday Kotak committee which came in there. They have given a little bit of, they're actually implementing in stages those recommendations. So it'll probably come in at some point of time. This could be a very significant way to mitigate this threat of familiarity here. Okay. Now, this is a very interesting case which came up for professional misconduct. This is Tridip Raj Bhandari was the ICAI. Now, basically, what Mr. Bhandari did was that he invested some shares. He invested in the shares of this company called as First Leasing. Many of you who are old timers would realize that First Leasing was one of those first NBFCs which did, leasing transactions quite long back, right? I think they were established in the early 1990s, right? And over time, RBI, which was having a role in investigating all these NBFCs, they had a final investigation which revealed that the First Leasing was falsifying its books of accounts. And I'm using this word very boldly here. Falsifying means they were giving transactions that are not recorded there in the books of account. Lease rentals were not coming in. They said they're coming in. So whole, complete misrepresentation of facts happened there. Now, what Mr. Bhandari did was, he was having shares. Obviously, the moment the RBI said that the books are falsifying, the share price fell down. Mr. Bhandari put a case in Delhi High Court against both the internal auditors as well as the statutory auditors, saying that because of you, the share price has gone down. In fact, his contention before the Delhi High Court was that you were not able to detect this particular case, therefore I have lost money, therefore, you'll have to give me compensation. And he filed his book against internal auditors as well as statutory auditors. Delhi High Court said that this is not their job. The job of the auditor is not to find out such falsifying the books of account, because it was a very convoluted transaction of multiple companies being involved here. There were about 8 companies involved in this particular falsifying the books of account. So it was what we call a circular trading, so to speak. And the Delhi High Court said that you cannot hold them guilty of professional misconduct, because their job is to comment on what has been recorded. Now, whether that what has been recorded is true, fair, and forensic, all those things would come into play here. But basically, the Delhi High Court said that you cannot hold them guilty. In fact, the Delhi High Court decision had a very interesting comment to make. And in this entire decision, they said that they told Mr. Bhandari, you have to find out whose books of account are these. They're not the auditor's books of account. They're the books of account of the client, of the company, First Leasing, right? So anybody who is being charged with falsifying would obviously be the management, not the auditor. I only go and see what is written there in the books of account. I can't falsify it myself. So there's one paragraph in this decision of Delhi High Court, which is very interesting. They said that you are putting a charge on falsifying the books of account and not detecting the falsification, but the original falsification is done by the company and not by these auditors here. Therefore, if you look at their engagement letter and all these things, they're only looking at auditing and not writing the books of account. Therefore, they held it as not guilty of professional misconduct. Of course, the other part was that you wanted the order to be in writing, and that the Delhi High Court said that what are the reasons for, you should probably give the decision should be given in writing here. This again, many of you would have probably read in today's newspapers. This is about ILFS versus the auditors of ILFS. This is a Bombay High Court decision which came up yesterday. This is basically a decision on 140 bracket 5 of the Companies Act, in which the NCLT can take action against any auditor in case they feel that the auditor has acted in a fraudulent manner. And the Bombay High Court decision, the case of this Sudha and Sen versus Union of India, which basically you're talking about BSR and those big 4 companies here. And the Bombay High Court has said that it is not applicable if the auditor has resigned from the company and the case has been put in later by the NCLT. So basically what the Bombay High Court has been trying to say is that the case should have probably been put in during the pendency of the auditor as an auditor and not after he has resigned. But let me also tell all of you that this is only a decision based on the facts of this particular case. It is possible that other laws in India could possibly still hold them guilty. I mean, Code of Criminal Procedure, all those things, are CPC, all that is there. But this is only a question of 140 bracket for the Companies Act. It's not about, acting in other laws in India. This is only about 140 bracket 5. So basically what the Bombay High Court has said here is that in case I have resigned, you will not be able to apply 140 bracket 5 of the companies, right? So NCLT cannot, put charges, levy charges against the auditor in case he has put, in case he has already resigned, without worrying about the reasons for the resignation. Obviously, you resign because of 1, 2, 3, 4, 5 reasons. Of course, the recent SEBI circular also says that you should give the reason for resigning in writing here. But this Bombay High Court decision is basically a sort of specific only to the 140 bracket 5. So they don't apply to other, cases here, right? And the other threat which auditors could possibly face is something which all of us know about. Accountant being threatened with dismissal from a client engagement or the firm because of a disagreement about a professional matter, and feeling pressured to agree with the judgment of a client because the client has more expertise in the matter in question. Planned promotion will not occur unless accountant agrees for an inappropriate accounting treatment. And accountant having accepted a significant gift from a client and being threatened, the acceptance of the gift will be made public here. So basically, I'm quite sure all of us have some such clients also, wherein they are saying that basically do what I say, do what I tell you, right? If I wanted to do this, you do this. So this is what is called as an intimidation threat here, right? And now, of course, the level of intimidation will also matter here. If it's a very insignificant intimidation, probably you can, ignore it. But if it's a very significant intimidation, when you're, worried about all these things, rotation of auditors, they want to change the auditor and all these things, you could have multiple situations there. These would have to be tackled by the auditor as per the code of ethics. This also will have to look at very seriously here, because now, of course, again, this concept of independence comes in here. As I told you earlier also, once the intimidation, one of these threats, if the auditor is acting independently, all these threats automatically get self-corrected. So they don't have to worry about the threats when you're worried about when you're doing acting independently. But many a time, this independence has always been a very large discussion. How independent can an auditor actually be? I think also what we need to realize is that, and I'm saying this, with the, knowing very clearly that, this is a fact of the matter also, right? As long as the client is going to pay our fees, no auditor can be 100% independent. And I think we have to face this as a fact, right? As long as he's going to, pay our fees, I cannot be 100% independent. But having said that, we know for a fact that independence also, not being independent also has got its limits. So I think basically we're looking at a situation, and should I cross the line or not? I think that sort of a decision has to be made on the basis of this intimidation threats here. Now, there are multiple, solutions have been given here, but I think we'll have to accept the fact that, we'll probably have to live with this, and depending upon the level of intimidation, auditor would probably, have to look at, how, how this particular thing actually goes in practice, and how we have to look at this. And as I would probably say that, we would probably have to look at the level of intimidation. If it is too high and, threat is really large, I don't think we should worry too much about, we should simply get out of the assignment. I think we should probably cancel the assignment itself, because you really can't sacrifice your independence too much also. But if it's a very minor infraction or a very minor thing, probably you need not have to worry too much about, the intimidation threat here. So the Code of Ethics also talks about taking safeguards here, assigning additional time and qualified personnel to required tasks when an engagement has been accepted might address a self-interest threat here. And having an appropriate reviewer who was not a member of the team review the work performed or advise as necessary might address a self-review threat here. So basically, what the Code of Ethics is trying to give us as a solution is the fact that I may not have a, I could probably use additional time and qualified personnel to required tasks when an engagement has been accepted. I can have an appropriate reviewer who was not a member of the team review the assignment. So that they will know that the assignment has been done independently by having a what we call as a third-party review. A third party can review this and look at it from the point of view of looking at how this goes in actual practice here. And you could also have another firm to perform or re-perform part of the engagement. It can address your various other threats here. And you could also separate teams. If you've got a large team, you could already separate the teams in dealing with matters of confidential nature. You could also probably have different engagements and different part of the engagement. Of course, this depends upon the size of the organization, obviously, but all these are the safeguards which an auditor should probably take while looking at all these various threats here. And again, you could have as auditors, we definitely have situations of conflict of interest, right? And this again comes in for various transactions we have got here. I could have advisory transaction to a client, or I could have confidential information about the client here in the course of the audit here. And I could be advising two clients at the same time, and they are probably talking to each other for an acquisition here. I could provide service to seller and buyer in the same transactions, right? And I could have valuation of assets of two parties who are in adversarial position with respect to the assets here. I could have multiple of these, we could have multiple conflicts of interest which are applicable here. And the way you probably resolve this conflict of interest is probably trying to tell the client that, look, I'm also probably doing work for the other person. There could be a conflict of interest involved here. So you could probably tell one of the parties who was there and, maybe not do one particular assignment here, or, walk out of one particular assignment here. The Code of Ethics has this thing called as KYC, which says that take all possible details of the client, including their, name of directors, whatever the residential address is, Aadhaar card, as the case may be. Just like banks, we should also probably, have client KYC. We should probably keep it in our, with us there. And this again is something which all of us are doing, accepting engagements, which is please communicate with the predecessor accountant, ask him whether he has any known information which in the existing or the predecessor accountant's opinion I need to be aware of before deciding to take accept the assignment or not. So I will have to ask the previous accountant from whom I'm taking over whether there's any reason for me not to take the assignment. Is there any particular reason for me not to take the assignment here, right? So that would also be here. So I just thought I'll probably inform all of you also about what could be COVID-specific issues on the Code of Ethics here. Definitely, there'll be a strong desire to smoothen the results due to COVID, because we have not been operating for quite some time now, and we do not know what has happened. Companies may want to smoothen results due to COVID and say, let's look at this transaction next year. We'll do a correction next year, as the case may be, right? And we could have transaction related parties without following the process. I may not have had the opportunity to have a board meeting done to get the transaction approved. I could probably not have a situation wherein that arm's length pricing would not have been followed properly here. Could have multiple situations here. Again, in all these specific issues, how am I acting is becoming very, very important here. And excess provisions under the excuse of COVID could also be made by many people here. So we'll have to look at this thing here. Okay, now before I come to the other part of it, I'll look at a few questions here, and let's go back to a few questions here. Accepting a silver plaque on the occasion of the 10th anniversary of association with the client, would it be against the Code of Ethics? I think you should simply take it and keep it in your house. Don't worry about it. It doesn't really matter whether you take a silver plaque or not. As long as you advertise it saying that I have taken a silver plaque at the on the 10th anniversary of my client here, right? And how the threats and safeguards could be addressed in proprietary firm. I think this is a very important question, sir, because I don't know. This is a very important question. Again, I would probably think that in a proprietary firm, the threat itself is lower. The threat itself is becoming lower because you don't have you don't have too much of a threat because. But again, the only principle that I would probably see would probably be that threat of familiarity, right? That would probably be a very large threat here because you don't sort of have a situation wherein you've got client, but again very familiar, you are with them for a long time, so you'll have to, that threat of familiarity is probably very important for a small client, right? But again, if you look at the other threats, I think those are slightly on the lower side, so I don't have to worry too much about those threats here. And I'll have to look again. I will probably go back to those comments here, right? So see from the beginning here. Okay, there's some spam messages coming in here. I think Nitin will take care of the spam messages, I think. So somebody called Arcotel is putting some spam messages here. So you just take care of them, right? Code of ethics identifies various business situations that could be in conflict, but there are many situations where psychophancy is a major factor in the client-auditor relationship. Completely accepted, sir, but then we'll have to look at how we probably mitigate this particular thing here. Now, as I said, these are only guidelines, right? These are only guidelines. There could be specific issues wherein you are probably not in conflict at all. You're probably doing the right thing, right? You're probably doing the right thing, and so maybe it's not actually a conflict also. Just look at it from the point of view of how it is really affecting that particular clause, if you want me to use that word clause. How it's, I probably think it will not be such a severe problem here, right? So I don't think I'm able to see other things here, so let me I'll go back to the presentation. We'll come back to this later on, right? This is a very important thing, which I'm sure that all of you are very keen to know about what the Code of Ethics is talking about on fees here. And you can see here, they're saying that the Code of Ethics says that a professional accountant might quote whatever fee is considered appropriate. Quoting a fee lower than an accountant is by itself not unethical, but the level of fees quoted creates a self-interest threat to the compliance with the principle of professional competence and due care. If the fee quoted is so low that it may be, I told you about this already here. So there is a definite a definite a threat here, in the sense that I may quote a low fee, but if I'm not able to do the work, then obviously there'll be a threat which is not going to be mitigated. So that could be a definite problem here. And the safeguards recommended by the Code of Ethics are adjusting the level of fees or the scope of the engagement, or having an appropriate reviewer to review the work performed. Please remember here that the Code of Ethics is not talking about changing the fees, right? They're not talking about changing the level of fees at all, right? So we're just talking about adjusting the level of, change the scope according to the fees, or you got a third person to come in and have a review the work which is being performed here. Now, this contingent fees has always been a consideration for many accountants in practice. Can I quote a percentage fee? Can I quote a fee based on a percentage, right? And the revised Code of Ethics uses the word called as contingent fees, and they're talking about the fact that there can definitely be situations wherein chartered accountants in practice can quote contingent fees, right? In the case of a receiver or a liquidator, the fees may be based on a person's realization or disbursement of the assets here, right? In the case of an auditor of a cooperative society, the fees may be based on a percentage of the paid up capital or working capital of the gross and net income of the profits. In the case of valuation for income taxes, the fees can be based on the percentage of the value of the property involved here. And fundraising services, I could have a percentage of the profits, total fund raised. Debt recovery services, I could have it on the basis of total amount of debt recovered here. Cost optimization. So the Code of Ethics gives us quite a few, situations wherein fees can be based on a percentage, and they're using the word called as language called as contingent here. And they've also given a clause, which is basically a clause H here, which talks about any other service or audit as may be decided by the council. And on this, you'd find that the council has recently said that charging of fees by members enrolled as IPs, rendered either individually or an entity under the IBC and rules made under, they can also quote contingent fees. Similarly, fees for entering non-assurance services to non-audit clients can also be based on a contingent fees here. So the fact that the thought that a chartered accountant cannot charge fees based on a percentage of fund raised or whatever that particular numerator could be, is probably not correct. In all these situations, the ICAI's the Code of Ethics has given us the permission to charge on the basis of a percentage of what that particular transaction which should probably have taken place. But probably what is most important is the fact that for if I'm an IP under insolvency, right? I'm doing this IBC insolvency for a particular client, and I'm an IP registered as an IP there. I can charge it based on the total amount of decided by the committee of creditors, as the case may be. You could have a certain haircut in a loan, or the total amount of sacrifice made, or the restructuring cost could be made here. I could use my various parameters to determine what is my contingent fees here. But probably more important is also the fact that rendering of non-assurance services to non-audit clients, even here, the council has granted specific permission to charge contingent fees. So basically, if you look at how this would probably, look at it in practice, you'd probably find that, audits, which could be statutory, internal, all those audits, I cannot do a percentage fee. Obviously, tax audits also I cannot do a percentage basis. But other things, when I'm doing a consultancy assignment for a non-audit client, it could be based on a contingency. So this is a significant relaxation, in my opinion, because again, a lot of discussion has happened on how much we could probably charge for this, how much we should not charge for this, and can I do on a percentage basis. I think the revised Code of Ethics has sort of basically resolved that particular issue here, and said that yes, it is possible to do it on a basis. It's possible to do on a contingency basis. You can probably do on various situations here. Now, the amount percentages, nothing has been mentioned here, so don't worry about 5%, 10%, 20%. Those, there's no upper cap, there's no floor also. You can do whatever you feel is your contingency, provided it's a non-audit client. I think the basic criteria has to be that it should be services rendered for non-audit clients here. And referral fees could also be a situation wherein I am paying a fee to another professional accountant for the purpose of obtaining new client work when the client continues as a client of the existing accountant but requires specialist services not offered by that accountant. And I could have a fee for a continuing client to another professional accountant. I could have referral fees basically. So basically what the Code of Ethics is visualizing here is the fact that, you got a friend of yours, chartered accountant in practice, who is having a client, and the client wants, let us say, for example, a valuation to be done. And since you have passed the valuation examination, and only you can do a valuation now, he refers you and he says a certain amount of referral fees to be paid to him. The Code of Ethics does not debar paying this referral fees here. He says that you can definitely pay a referral fee to another professional accountant for getting work because you are qualified to do the valuation work, and therefore, you got the assignment because of your qualification here. You can pay a referral fee here. And it could work vice versa also. You could also refer somebody for giving, work there. You could probably receive a referral fee also. The only safeguard the ICAI Code of Ethics is talking about is that disclosing to clients any referral fees paid to or received from another professional accountant for accounting services might address a self-interest. So basically what the Code of Ethics is trying to tell us now or advise us is that you paid a referral fee to a particular chartered accountant for getting some work or valuation work, as I told you, but maybe under the previous Code of Ethics, you were just silent on it. Under the revised Code of Ethics, they're probably saying that, I think as a safeguard, just inform the client that you have got this referral fees from this particular, and that's only a question of information. You're not going to do any, there's not going to be any harm done by giving this information here. So they are saying that if you want to act professionally, you probably have to give this as a safeguard here. So specific, what you can say, references in the revised Code of Ethics to both contingent fees as well as to referral fees here, and they sort of legalized that system now. So I could charge fees based on a contingency or based on percentages in those specific scenarios which I just listed out. Similarly, I could take and receive referral fees from fellow professionals for the purpose of getting or giving additional work also, right? And of course, this is thing which all of us are again familiar, and specifically the Code of Ethics has used this particular language saying that, don't fall for inducements, gifts, hospitality, entertainment, political or charitable donations, employment or other commercial opportunities, or preferential treatment given by clients, rights or privileges here, appeals to friendship and loyalty. All this could be inducements given by the clients for whatever their intention may be for that. I mean, they could have, different intentions why they are giving for this inducement here. But basically, the Code of Ethics says, please don't fall for these inducements. And you probably, again, the word called independence strikes in here, right? They're using the word saying that accountant is offered hospitality from the prospective acquirer of a client while providing corporate financial services to the client. And a professional accountant regularly takes an existing or prospective client to sporting events and accepts hospitality from a client, the nature of which could not be perceived, or which could be perceived to be inappropriate when to be publicly disclosed here. And we have these situations, 3 visualization situations have been given here. Again, if you look at a particular pretty interesting example, just to give all of you a particular example here, the sporting events reminds me of this, the ILFS situation, wherein the one of the credit rating agencies of ILFS, I think India rating of what that rating agency was, right? And it appears that ILFS were giving them tickets to watch Champions League football matches of Real Madrid in Europe, right? And they were buying tickets and sending these people out to those matches in Europe here. This is the opposite what you're talking about in inducement here. But again, here, if you look at it from the point of view of practicality, the moment I accept that inducement of going for the football match, or even taking the ticket for the football match, I lose my independence there. So basically, what the Code of Ethics is saying is that don't fall for this inducement at all. It could be in the form of hospitality. It could be in the form of various inducements given by the client. It could be also possibly inducement by way of a financial benefit to you, right? Stay quiet. I'm going to not follow Ind AS 115. Can you please stay quiet? I'll pay you some amount of money, right, for that. That could be an inducement given to you, right? So the Code of Ethics does not specifically, it only gives you examples or samples, if you may, for what could be possible inducements here. They don't give specific, saying 1, 2, 3, 4, 5. These are the inducements possible, right? But what they have done very nicely in the Code of Ethics is that they have said that in case you have got a situation of an inducement, how do you resolve it, right? And they have said that you be transparent with the senior management of the firm or of the client about offering or accepting an inducement, which basically means that you go and tell the senior management that, look, I've got this inducement here, I've taken it, and you feel that it does not impact your independence here. Or in case the particular client or the particular entity has got a log monitored by the senior management, you make an entry in the log and tell them that this inducement I've got, and this log has been maintained. I've written that in that particular log there. Also possible, you can have a reviewer who could probably not involved in that particular audit here, review any work performed or decisions made by the accountant. So basically, the idea behind the safeguard is that you have accepted a particular inducement. It is possible that you may have compromised on your work. I mean, that is the threat which comes out very clearly here, right? And so what the safeguard which the Code of Ethics is sort of trying to tell us is that have a reviewer who is not otherwise involved in providing the work to review and find out whether you have compromised anything on your on the quality of the work just because you have received this particular inducement. More significantly, the Code of Ethics says that if you have got the inducement by way of a financial benefit, you can probably donate that inducement to a charity after receipt and disclose it appropriately. Or you could possibly also reimburse the cost of the inducement. You can tell them, okay, I'm going to give this cost of the inducement back to you, right? So it does not become a benefit as a benefit to you. You're still having a cash outflow because of that. And or the other option given to you is that as soon as possible, returning the inducement, such as gift, after it was initially accepted here. So again, these are the various types of safeguards that have been given here. So basically what the Code of Ethics is saying is that in a situation wherein you have got these inducements or the client is giving these inducements. Now, let me also inform you that the client can give it for two different reasons. One is he could have a particular end purpose in mind, right? He could say that I'm giving this inducement for a specific purpose. I don't want you to comment on this particular matter. That's a very straight, direct inducement. You definitely should not fall for this inducement, right? The other inducement could possibly, he's doing it in the normal course, right? He's such a, a client who gives this for everybody, and you are one of the persons who's included in that everybody. So he's giving this inducement to everybody, and you're also falling in for this inducement because he's giving to everybody here. So the second type of inducement could probably be a little bit of a harmless inducement, but still the Code of Ethics does not distinguish between what is harmless and harmful inducements. It gives us these possible solutions or possible safeguards which have to be done here. Now again, if you go back to the old Code of Ethics, this is a significant change from the old Code of Ethics. In fact, I think if I'm not wrong, the previous edition only spoke about disclosing the inducement which has been given here. But here they've given you specific actions which can possibly be taken, like donating the inducement to a charity and reimbursing it. All this has been given here. All this is are safeguards which have been given by the Code of Ethics for these inducements here, right? As I think a few of the questions also have been answered on, have come up on GST. Let me do this also quickly, and so probably answer a few of those questions also will come up here. An internal auditor cannot do a GST audit. This was a specific decision of the council. Again, they felt that there could be a clash of conflict of interest here if an internal auditor does a GST audit here. But the ESB has specifically said that you can enroll as a GSTP or as a TRP, as a tax return preparer. That can be done by a practicing chartered accountant. He can only give training through seminars through existing clients. Again, this is a very thin line here because again, this word called as existing client is again slightly difficult to. What happens to potential clients? Why would you want to give training only to existing clients? These could be potential issues here, but if your existing clients brings others to the seminar, that is not an offense. That's perfectly fine because there's no direct inducement by you which are to that new person, but it's coming through that's fine, right? Practicing CA cannot use a designation called as GST consultant. It cannot be done because you will be known only as a chartered accountant, practicing chartered accountant. You cannot use the word called GST consultant. And the council has also, the ESB has also come out with this rather important update saying that the GST updates can only be permitted in individual name, not in the firm name. I do not know why this is there, but it's there. So we'll have to probably follow it here. And possibly it is, again, I am not very sure about the conflict of interest situation here, but they're probably trying to say here that, give updates only in individual name, but the client could be a firm client, not an individual client. So how does this work in practice? We'll have to work out and see whether, whether I can use the word, my individual name, and then put the firm name. These are things we have to probably think about. And GST services can be published, but not the fee for those services. I think, again, if you look at the ESP decision, they're saying that as a chartered accountant, you can probably try to tell what you are doing, what services you are offering. You can file 3B, you can do your return filing, you can do your GST R1, 2A reconciliation, all these things you can probably mention here. But what you cannot probably mention is the fee for those particular services. That clearly cannot be mentioned here. So basically, the Code of Ethics is not permitting you to, give not permitting you to do a quote of fee for GST. Now, the question which comes up probably is that we're talking about publishing here. We're not talking about quoting here, right? We're talking about publishing here. So let us say you've got a website. On the website, you cannot say that I'm doing GST R3B for 500 rupees per month or 2000 rupees, whatever you're charging, right? You can't mention the fee here. But it appears that you can say that you are doing GST services. You're providing compliance services under GST. You're filing 3B returns. You're doing 2A reconciliation. You're doing a whole bunch of stuff on the GST. But you can't put the fee against those individual services or one fee for the entire service per se, right? And quickly, let me also tell you about a couple of ESP decisions which have come in here. And this Ethical Standards Board has given quite a wide range of decisions here. Internal auditor can buy the shares in the company. Now, he cannot be a GST auditor, but he can buy shares in the company. This is what I think the little bit of a dichotomy in the decisions given here. But anyway, that's how the ruling is right now. I can buy shares of the company. WhatsApp cannot be used to create awareness about your practice. Of course, nowadays, WhatsApp, you're only forwarding messages about COVID, so does not really matter. Why is the question time to create awareness now? But anyway, the ESB is saying that you cannot create awareness about the practice through WhatsApp messages. You can give updates on GST, right? You can say that, okay, GSTR 9C form is now updated on the portal. You can find a GSTR 9C, 9D, whatever form it is, right? But don't create awareness about your practice here. It also says that you can have a credit card of the bank in which I'm an auditor, provided the outstanding balance in the card does not exceed 10,000 rupees beyond the precise limit of the, over and above my credit limit, I should not cross 10,000 rupees, is what they're trying to say here. And a chartered accountant practice cannot become financial advisors and receive fees, commission from financial institutions such as mutual funds, insurance companies, NBFCs, etc. And there's also a very significant addition to the code of ethics about what we call about custody of client assets here. I cannot hold client assets unless permitted to do so by law. Now again, when you're talking about law here, I could have a specific requisition from a client to hold his assets on his behalf. I mean, I can obviously do that. There's no specific law preventing me from doing it here. But however, the Code of Ethics says that prior to giving or taking custody of these assets, make inquiries about the source of these assets. From where these assets have been acquired, many a time it could be Prevention of Money Laundering Act could have been involved here, or there could be illegal activities have been taken place here. In case you feel that the source of those, assets is not very clear or has not been properly disclosed or is something which you are not very comfortable with, you can refuse to take custody of those particular assets. You can say, no, I'm sorry, I cannot do it. Again, this pure, the concept of independence comes up here, saying that because these have been acquired to these activities, I will not take custody of those particular assets here. Now, again, you can see in many cases here, wherein the Code of Ethics, as I told you earlier, also talks about a lot about the auditing standards here. We all face situations on a day in and day out basis when there's a non-compliance by a client, right? And what they're talking about basically is that in case there is a non-compliance by the client of any fact of the matter, it could be anything, non-compliance, any law, regulation, violation of the law, could be various situations here, right? And the Code of Ethics basically says that please discuss this with those charged with governance. In most of the cases, for us, the audit committee here, talk to them and ask them, why this is particular not been done, or why the non-compliance has not been done. Sort of basically trying to tell them that you give importance to the fact that you are trying to highlight this particular reason why it is not done. But let me also tell this very clearly that many a time what typically would happen is that look at the revised SA 700. It gives plenty of opportunities for an accountant to express his view. I'm not talking about the CARO here, only the SA 700 here, right? You could have an emphasis of matter. You could have a observation in the audit report saying that your disclaimer of could also be there. But we also have this new SA 700 on key audit matters, where I can probably say what could be key audit matters here. Though the key audit matter is neither an EOM nor a qualification nor a disclaimer, but it sort of highlights to the shareholder, receiver, reader, user of the financial statements, what are the significant audit matters which have come up in the client, right? And it is possible that a key audit matter in the current year could be a EOM next year. It could escalate into an EOM because I got it out as a key audit matter in the current year, and the client has not followed a certain procedure for that, and it could possibly become a EOM in the next year, or it could probably become a qualification also in the next financial year. So The audit report gives you plenty of opportunities here, but what the Code of Ethics is basically talking about is the fact that even before you get to the audit report, please go to the audit committee and tell them that this is what is happening. This is what non-compliance has happened here. Now, a large extent, you can probably find that this is something similar to what independent auditors are supposed to do, right? You could have a disagreement to the particular point of view, and unless the disagreement is recorded in writing, maybe the independent auditor is not acting independently also. So similarly here, for an auditor, for him to say that non-compliance is there, even before it finds its way into the audit report, please ensure that the client is also informed about this and spoken to about this. So this becomes a very important part of your compliance requirement. Again, the Code of Ethics has a specific clause saying that please talk to the TCWG and tell them that this non-compliance is there. Otherwise, it will not be able to find its way directly into the audit report here. Again, here you could find a significant entry coming in here, talking about over-dependence here. So again, we had a question which was asked about proprietorship firm here. The Code of Ethics talks about the fact that when the total fee generated from an audit client by the firm expressing the audit opinion represents a large proportion of the total fees of that firm, it could be a self-interest or an intimidation threat here. And the Code of Ethics gives some benchmarks. They say that 2 years audit fees from the audit client and its entities are more than 15% of the total fees received by the firm, expressing the opinion on the financial statements of the client. The firm shall, so they're basically talking about a situation wherein, what do? You've got over dependence on a client. We're not talking about one particular client. It could be a group of clients who are all related entities also, right? And if your total fees for 2 consecutive years is more than 15% of your total fees, the Code of Ethics says that disclose to the client that the total of such fees is more than 15%, and again get an external person to perform a review of the work done for the particular client. So you would find that the revised Code of Ethics has given a sort of a solution invariably by saying that you could have a threat here. It could be a dependency threat of self-review. You could have an advocacy threat, intimidation threat. You could have various types of threats in the assignment of the client you're doing work for. The way to mitigate it is get a third person to do the work and ensure that independence has not been sacrificed or compromised here. So in case, again, here you would look at it very clearly. What they're basically trying to say is that once you have crossed, once a particular group of entities is giving you more than 15% of total fees, right? They're not asking you to sort of, give up the client, or they're not asking you to sort of, widen your client spread, so to speak, or, diversify clientele as a given. They're not saying any other sort. What they're saying is that please disclose to them, the client, that we are depending upon you. Now, the client, how he reacts is going to be a completely different situation altogether. But the Code of Ethics is very clearly saying that please disclose to them so that they are aware that the dependence is there. Now, what could possibly happen there is that the client could also get extra careful, saying that, okay, this person is depending on me for work, so he may not probably follow everything that has to be followed. So there could be a counter, thing from the client also. So it becomes very important disclosure point of view. You would see that this is what the revised Code of Ethics is talking about. Basically, they're saying that you could have different types of threats here. You could follow different safeguards for those particular types of threats here. And most of the cases, the safeguard is not to give up a client or not to do the work here. They're talking about a situation where you could probably bring in a new person, review your work to ensure that you have acted independently here. Apart from those specific requirements here, nothing else is specifically mentioned in the Code of Conduct here, right? And of course, this is coming from the company that itself. What are the non-audit services here? This has been there for a long time, as I told you. Accounting and bookkeeping services, internal audit, doing and design and implementation of any financial information system here, actuarial services, investment advisory services, investment banking, outsourced financial services, management services, other kind of services may be prescribed, or all possibly there here. Now, many a time we do a work around here, which is not something which is any of us are not very familiar with. It is a fact that I have got a particular entity which is a accounting firm, which is a partnership firm, and I have got a private limited company which is doing one of these services here. And For all practical purposes, I'm maintaining that both are separate. Both are, not linked to each other. Both are not related. Then, there's a Chinese wall separating. Partners different, staff are different, office locations different, everything is different here. So can I do that? Is it possible for me to do that? Can I render non-audit services through a separate, PLC as against my partnership form for the practice here? Which is what I think many of the things, what is happening in practice also nowadays. Now, let me tell you that there's no specific bar against this, as long as those entities are really, truly independent of each other, right? And many ways, for example, having common partners could be a giveaway. Having a common manager could be a giveaway. Physical location as such may not be a giveaway, but we could have various, such situations wherein you could probably not exactly be independent, so to speak, in non-audit services. Yeah, so that's very important to understand here. Okay, I'll take up the questions a little bit as I finish this, but I just want to finish this and then look at this. I've just put this up as a question to all of you, and all of you who are viewing this probably look at this as a question here, and I'm asking this question to all of you, saying that you've got a client who's got both imports and exports as well as domestic purchase and sales, GST, all these things here. And the client approaches you and asks you to do a complete review of all the applicable acts and implement how much of money he can save. This is a specific assignment. Remember that you are the auditor. You are doing both stat and tax audit for him, and he's coming and asking you that I'm spending a lot of money on IGST payments and customs payment. Please give me a review and say how much of money you can save here. The first question I'm asking all of you is, can you take up the assignment? Number one. That is point number one. And second is that you want to quote a fee of 50,000 rupees basic. In addition, that if the savings is more than rupees 50 lakhs of rupees, which I'm sure you feel it is going to be, you will say that your fee is 10% of the total savings here. So the question which is basically in front of all of you is that two questions. Can you take up the assignment? And the second is that in case you do, can you quote on the percentage basis 10% contingent fees? I'll answer the second question first. The second question, if you looked at what the council said, was that for non-audit clients, you can do non-contingent fees. For non-audit clients, you can go to contingent fee, not for audit clients here. Here in this case, since you're doing a tax audit here specifically, I don't think you can go to contingent fee as such, right? Whether you can take up the assignment as such, again, no specific bar in the code of ethics. So I would probably think that you could. There's no, you're not the internal auditor here, so you can't probably, not doing the tax audit here. So maybe somebody else is doing the annual audit for GST also. But I would probably think that with all the necessary safeguards, you could probably take this up. So this is what I basically wanted to tell all of you now. So let me do this, and I think Sir Namaskar, Kore sir has joined me. Okay, let me ask a few questions. Let me answer a few questions here. How do I go on top? Sir, Nitin, can you help me to go on top? I think a few questions I've actually sort of missed here. Okay, so I'll go back to what I can see on the screen right now. Does it apply even in case of a bank audit assignment, especially in case of initial years of statutory branch audit fee could be more than 15%? No, I don't think so. I don't think it will apply for bank audits. If we're talking about your, other client, because bank audit, it will obviously not apply here. You can't go and tell the bank that I'm depending on you for the fees for 15%. So I think there's a very clear, it's a nice question, but we're talking about public practice, not your specific given by other people. So I don't think it will apply for a bank audit here. R3 has asked me a good question, and can see advertises coaching center, small firm. Okay. Coaching center, you can put coaching center, but I don't think the institute is going to be very happy with it. So I don't think we should probably advertise the coaching center as such. No specific this thing. I don't think you should probably do coaching center here. And more importantly, if you do coaching center also, R3, don't mention the fact that it is a CA coaching center. Don't mention in name as CA R3, but right. You can probably say R3 but as such, but not CA R3. But so don't bring your profession to the purpose of coaching center here. Can a CA in practice be networking channels like BNI, business hubs networking, business sharing, etc.? Perfectly possible, sir. No problem, because you've got networking firms itself. So these networking channels are definitely permitted. You don't have any specific thing against it. But however, I think what is more important to understand is how do you conduct yourself in those networking partners. I mean, you can't go and advertise too many services there. You can only say this is what you're going to do, right? You can't profess to do non-CA services in those networking channels also. So I think that also becomes a very important part. So only what your profession is permitting you to do, you should probably go and advertise that, right? So this is answered. Atri is answered. I think some questions from Alama Prabhu sir. He always asks tough questions, but I'll have to go on top. How do I go on? Sir, Alama Prabhu sir questions ಕೇಳಿದ್ದಾರೆ. Sorry, sir.
Yes, sir.
And I go on top. Alama Prabhu sir questions ಕೇಳಿದ್ದಾರೆ. ಕಾಣಿಸ್ತಾ ಇಲ್ಲ ಸ್ಕ್ರೀನ್ ಅಲ್ಲಿ.
No, you can answer. Whether he sent a question, sir?
ಕಳಿಸಿದ್ದಾರೆ, ಬಟ್ ನಾನು ಕಾಣಿಸ್ತಾ ಇಲ್ಲ ಇಲ್ಲಿ. There's a thin line as regards familiarity is concerned. Can you throw some light on that? How to stay within that line? Okay, so this is again Mr. Govindraju asked this question. He's saying that all of us are familiar with the clients, so it's a very thin line. How do I not cross the line of familiarity? Again, sir, as I told in my earlier also, I told you in my presentation, I think this very clearly depends upon the relationship you have got with your particular client as such, right? And also the size of the client and also your size as a firm. I think both of these things really matter a lot, right? Now, obviously, the larger the size of the firm, the threat of familiarity becomes a little bit lower because, you could probably rotate staff and, you could probably have independent review and all those things. But in a smaller firm, this could be a little bit of a sort of a challenge. So how do you stay within that line? My solution would obviously be disclosure. Tell the client that, this is a threat which I've got. And so you also have to be open in what you're trying to tell so that I can also be, clear in what I have to respond to whatever you're trying to say here. So I think disclosure will be the only way to solve this particular problem, right? And okay, anything else which we can think of? Alama Prabhu sir, if you are there, can you repeat your question? Because ನನಗೆ screen okay. Why should the firm be held responsible for the gross negligence of a single partner? ಇಂಥ ಕ್ವಶನ್ ಕೇಳ್ತಾರೆ ಅವರು, ಎಲ್ಲ ಕಷ್ಟ ಕೇಳ್ತಾರೆ. Simple question ಕೇಳೋದು Alama Prabhu sir. Sir, I think
the surprise on top, it's not displayed in an alphabetical order also. You can see as
he's repeating the question here. His question is that why should the firm be responsible for the gross negligence of a single partner? Sir, if you look at it, the ESB will only apply to the individual, not to the firm. The decision of the ESB will only be to this thing, individual, not to the firm. Firm ಏನು ಮಾಡಕ್ಕಾಗಲ್ಲ. So it will only be for the individual here. But the firm can be held responsible by other bodies such as SFIO and all those people. SFIO and NAFRA, avara firm at. But the ESB as such only look at the individual, not at the firm, right? And can a CA keep blank letterheads and rubber stamp of his clients in the office for the sake of convenience of operation, for taking printout and keeping it ready for the client to come in? I think during COVID time, he has got some letters on the Alama Prabhu question. Sir, if you ask me, honestly, the question answer to that should be no. I don't think you should keep blank letters of your clients for the purpose of convenience. If you look at the new code of ethics, I think it is worth doing a little bit of inconvenience than having convenience options here. So if you ask me, I would not recommend it. I will probably say that, you give back those letters and tell them I'll come and take it when required, or you can take the printout there. I would not really advise against keeping those things in your office or, for the purpose of convenience here. If a partnership firm deed contains a clause making the engagement partner solely responsible for acts and negligence with the other partner get immunity, definitely yes, 100% you get immunity. If the partnership specifically states that you've got this thing here, you can definitely get immunity. No doubt about it at all, right? BNI already answered too. Rani, what is the question? Just said sir and stayed quiet. I don't know why she just said. Rani, ask your question. I think otherwise I have basically answered most of the questions here. So I thought I should wait for a few moments. Anyway, but so here's the thing for all of you. For people who are still online and listening, here's the question for all of you is that, This code of ethics is a pretty, it's a pretty detailed document. It goes into more than about, 200 and 300, 300, 350 pages. And there are quite a lot of clauses there which are, but if you're looking at it from the point of view of simplicity, right? You want me to simplify it, I'll just look at those 5 threats. I'll just look at those 5 threats and say that every single day, day in and day out, we have a threat. How do we mitigate those threats? Please remember that those threats can never be eliminated. You're going to have these threats day in and day out. The question of elimination does not arise at all. But how do you act independently, and how do you, sort of mitigate those threats or reduce those threats is what this entire code of ethics is talking about. So please be a little bit wary of this code of ethics here. It is only applicable from 1st of June, but 1st of July. But before we can, think of it, 1st of July will be upon us. So this is going to apply to us very soon. So please be a little bit wary of these particular things. I'm sure that the branch will do detailed programs later on. I'm sure that Mr. Corey is going to do later. I mean, later we'll have detailed programs also. But this is just a sort of a curtain raiser for this particular thing here. I think many people will call to talk on NRA taxation. Would that be variation? Okay, fine. Rani, I'll answer that separately here. Okay. Accepting a silver plaque on the occasion of 10th anniversary of the occasion of the client would be against the code of ethics? No, sir, I don't think so. I've already answered this question. Don't worry about the code of ethics. I'll advise you to take the silver plaque, but don't go and advertise it whether that you got the silver plaque because of this 10th anniversary. Don't go and advertise it. That's all I'm saying, right? And whether attending family functions of the clients and receiving gifts on such occasions against ethics, again, I don't think so. Don't worry about it. But don't go and tell that I've got this beautiful Ganesha photo because it's a marriage and put it in your hall. Don't mention that specifically there. So I think that will answer your question. Please attend the function. Anyway, maintain social distancing there also, even if you're going for the function. That's all I can probably tell. Right. Okay, sir. Corey, sir, thank you, sir. I've done my presentation. Another question is I'll just leave my...
yes, sir. Yes, sir. I lost the electricity there. Connection. So temporary.
I'll give you the material. I think you know my email address. So just send me email. I'll give you the material.
Yeah, yes, sir. We are going to upload this to the website also.
Matira, okay, very good, very good. Okay, right.
Please, we are uploading in the website. So very well present, sir. Sir, just now I received a message from CA BP Rao sir also. The very good session. So it will encourage us to conduct more programs. So on behalf of Bangalore branch and on behalf of all the viewers, I wholeheartedly thank you, sir. Thanks for your wonderful presentation. And it was required at the time that 6 days back, one of the member requested send a message to me. Then I immediately asked our staff to contact Mohan sir and get it done. So you are always for us anytime for the branch activities. So I'm very, very much thankful for you, sir, for sparing your knowledge to the members across the country. They are viewing this program. So once again, sir, wholeheartedly, I thank you very much for your wonderful presentation, sir. Mohan, sir.
Thank you, sir. Thank you very much. Thank you very much.
I thank all the viewers for your active participation for this Jnana Dasava live webcast program from the Bangalore branch. The tomorrow is very important session will be there. Health is wealth. It will be taken care by Dr. Lingraju, and the Yoga Guru Srinivas is taking this 2-hour sessions. Very effective session. It is in Corona time, how the chartered accountants, and not only chartered accountants, your family member can also view this program, Health is Wealth program. So I thank all the members for across the country viewing this sessions. And again, special thanks to the CA Mohan R Lavi sir for the wonderful presentation. Thank you, one and all, sir. Thank you, sir. Thank you.
Thank you.